Hi, everybody. Assalamu alaikum. My name is Kulthum, and I'm the co-founder and general partner of IDI Ventures, an early stage VC fund for Pakistan. So thank you to Ali Fahad and the Pak Launch community for always holding these amazing conversations. And today I'm actually really honored and excited to host this fireside chat with one of my heroes, actually. This is the first time we're meeting actually on Zoom today. Mamoon Hamid is a partner at Kleiner Perkins and has been an early investor in some of the most well-known companies in the world, including Slack, Box, Yammer, and Figma. Really excited to have you today, Mamoon. Welcome.
Thank you so much, Kulthum, for hosting, and Ali for inviting me. This is just an incredible venue that you put together in Pak Launch, and I'm really excited to be here.
Awesome. So for those of you guys in the audience, and I feel like we're going to have a really big audience today, people were early, which for Pakistanis is saying a lot, Mamoon, so you could tell people were excited to hear you speak. Feel free to drop questions in the chat. I will try to get to as many as possible. I have a bunch of questions. Mamoon knows this. I went down a deep rabbit hole researching, so I'm really excited to kick things off. So for those who don't know things about Mamoon, he actually grew up in Frankfurt, Germany, which I found to be quite interesting. I'm also a third culture kid, so I kind of grew up everywhere as well. And so the fact that you grew up in a traditionally Pakistani household, which you put in your bio, traditionally Pakistani household in Frankfurt, Germany, and obviously you spent most of your adult life here in the US. Just curious for you, like, what has it meant navigating those different identities, and how has that actually impacted your worldview? And is there any time that you might feel more German or might feel more Pakistani or more American, depending on the situation?
Yeah, it's actually just an amazing and wonderful way to grow up, I would say. I did live in Germany from the age of birth pretty much to a 10-year-old kid. And then I lived in Pakistan for 3 years as a 10-year-old and 13-year-old. Then I went back to Germany from 13 to 16. And then I've been in the US since then. So college. So as you said, my whole adult life really been here in the US without my family. My parents still live in Germany. My extended family mostly lives in Pakistan and across the globe, like many other Pakistanis who migrated elsewhere. But to your point about, my identity, I'm married, I have 4 kids, and my wife is of Pakistani descent as well. So, our kids, even though they're American, and they're young, but they identify as being Pakistani. In fact, my daughter, who's 4 years old, has an event today where she's wearing Pakistani clothes today because that's her identity as a person, and all the kids are supposed to come dressed up as what their ethnic identity is. So clearly, we're 100% Pakistani ethnically. I would say I was trying to think about, I dream in Urdu, I swear in English.
That's awesome.
And that's sort of the extremes of it, right? That's what the heart and the mind sort of, but I love Pakistani food the most. And, but I love living in America. And I love what I learned as growing up in Germany, the discipline and organization that you learn just growing up in Germany. So I really do fortunate to have that worldview of growing up in a fairly developed, very developed country, and that lacked, I would say, opportunity for someone like me, actually, someone whose parents had migrated to Germany. And America was that dream. It was the true American dream. Someone who's 16 years old, that's when I came to this country, and to be able to just work hard and put my head down and do the things that immigrants do, and then make a life of my own, and get married, have kids, and then kind of fully live the American dream. And I think that's what America really affords us, and I think that is a beautiful thing, which makes me really feel very grateful for this country, and really grateful to serve the interests of this country as well. But I also, at heart, as you know, because I dream in Urdu, I bleed Pakistan as well, and I'm excited about all the things that are going on over there right now.
Yeah, and we're excited to talk about it today. So you talked about moving to the US at 16. I think a lot of people know you as, this really highly reputed venture capitalist, but actually you went to school for engineering. I think you went for undergrad, and then you got your first master's degree in engineering from Stanford, went to Purdue for undergrad. Just curious for you, like, what was that story like for you, going from being, starting your career, or like starting like your as a student studying engineering, and what is like that transition to going to be an investor? And does that actually impact you at all in terms of that background in engineering? How does that influence you as an investor?
Yeah, it's a great question. I think it's a journey. There's always something, a thread in my mind that I continue to pull on, even as a child. We just passed I think it's in 1986, the Challenger explosion. I was 7 years old, and it got me really thinking hard about space and wanting to go into aeronautical engineering. And Purdue happened to be one of those places where more astronauts had graduated from Purdue than any other college in the world. And so for me, it was like, this is a college I should apply to when I go to, at the right time. And I did, and that's where I ended up going. I didn't study aeronautical engineering, but I did study electrical engineering. And that is actually what led me to Silicon Valley after undergrad. And in Silicon Valley, I was learning how to design chips, and that's what I came to Silicon Valley to do, is design chips. And so it was all these little points in my life that allowed me to take the next step, and the next step after that. Turns out that my first day on the job at this company, Xilinx, I was sitting in a cubicle and had this amazing computer, it's Sun Workstation, and I was using the Netskope browser, and like buying books on Amazon as I was going to grad school at Stanford, and just this new search engine had just come out called Google, and you look at all those companies. I started to investigate who are the people starting these companies, but who are also the inventors. As an engineer, you're thinking, who's invented this stuff, and then who are the people who get behind these companies? And it turns out it was these people called venture capitalists. Mm-hmm. And furthermore, the company that I was working for was also backed by venture capitalists. And believe it or not, there was one thing in common between all 5 of those companies that I just mentioned: Google, Amazon, Sun, Xilinx, and Netskope. Kleiner Perkins was the first investor in all of those companies. And so I started to research what do people like at Kleiner Perkins look like? Who are these investors, venture capitalists? What do they look like? What do they study to become venture capitalists? And that really planted a seed very early on in my professional career as an engineer, what it meant to be a venture capitalist. And that's like the journey that I started to take down beyond that, which is going from an engineer to moving into product, and then marketing, and then going back to business school, because I read that a lot of these venture capitalists went to business school after having been engineers. And there was only 2 business schools that they seemed to go to, which was one was Harvard and one was Stanford. And I said, okay, well, I'm applying to one of those because I'd already gone to Stanford, and luckily I'd gotten in. And then after that, I just set my sights on finding a job in venture capital. And so I finished business school in 2005, and in 2003 and 2004 was solitarily focused on finding a job in venture capital.
I love that. I just moderated a panel last weekend, actually, at Harvard Business School, or it was Harvard Business School's conference. And James Currier and Dwayne, who are both obviously Village Global and NFX, both went to HBS together, which I kind of love, like the network that's being built there as well. So let's talk about that, right? In terms of just even the pathway, you talked about the fact that you discovered Kleiner Perkins really early on when you were just an engineer. And so it seems really kind of beautiful and circular that you are there now, but you actually started out at US Venture Partners. You left that in 2011 to co-found your own fund, Social Capital. And then you left that in 2017 to join Kleiner Perkins, which, a lot of times, and I say this as like a young GP, like the dream is like, go work somewhere that's really storied in an institution, and then leave to start your own thing. And for you were at something, started your own thing, and then we kind of went back to this like big institution. I'm just curious about that journey. And was it because you always knew about Kleiner from the very beginning, or what kind of led you into the path of wanting to kind of go to a larger institution that's with a like very long history, 50 years?
Yeah, it's a great question. And Yeah, so my first 6 years of venture capital, really it's an apprenticeship business, and I went to USVP because I thought I could learn from a number of the partners that I got to interview with, and thought these were legends in their respective spaces, especially in semiconductors, which is what my background was. And so they had a couple of really legendary semiconductor investors, and I was all about I want to go learn, and then maybe I'll get a chance to invest. And so that was 6 years. I would say the first 1 to 2 years was like pure learning, shadowing these folks on boards, and then about 2 years in, I got to make my first investment in a company called Box, where I got to sit on the board for many years. And even though that's not a semiconductor company, I sort of took a liking towards more software-related businesses. And but the first few years was building up a career in venture capital, was learning, then investing in a few companies, seeing those become somewhat successful. By the time I left in 2011, they were looking good, but they weren't going public. Of the 5 investments I made, 2 ended up going public, and one was Yammer, which got acquired by Microsoft. So I saw soon after some of those results actually come in, which it takes a while, as you know, Kulsum, like being a venture capitalist takes a long time to figure out if you're any good at this job. And but going back to 2011, this is right around the time when Steve Jobs has passed away, and there's like this notion of like, go do something foolish, carpe diem, right? And you're young, you kind of know what you're doing now, and you have a couple of friends who are in a similar place in life, similar aged, and have something to look at and say, hey, like, I think we can do this. And so we went and started a new firm, Social Capital, in 2011. And it was pretty incredible to build, a new fund out of nothing. That
like
was
your own startup, basically, right?
Totally a journey of a lifetime, right? To go put put a firm on the landscape and go invest in some pretty cool companies and build something of your own. And but you're right, like there's this. And that was about a 6-year period of Social Capital. So 6 years, actually, it was 6 years at Xilinx, my first job out of college, 6 years at USVP, 6 years at Social Capital. But I think the notion of, Kleiner Perkins, going back to my first few days on the job in 1997, was the opportunity to really remake Kleiner Perkins and provide a generational transition for this now 50-year-old firm, at the time 45-year-old firm, that needed to reinvent itself as well. Was too interesting an opportunity to pass up for me. And that really took a life of its own. And going back again, to my first days in Silicon Valley, it's like, whoa, like the opportunity to go do this at Kleiner Perkins, the firm that got me interested in venture capital, the people that I looked up to as the legendary investors in the whole industry. And for me to be able to go there and, really help remake us as a firm as well.
And I think, I would love to hear a little bit more about that right now, because Kleiner Perkins is, you just mentioned you guys are turning 50, or have turned 50 this year, right? In terms of 50 years of being around, which makes you guys very iconic in this space. I'm just curious for you, because this year, beyond the fact that you guys are turning 50 or have turned 50, I don't know how it works in that way, but the fact is that you guys also on January 11th announced 2 new funds, your 20th fund, KP20, as well as a second select fund, KP Select 2, which is a $1 billion fund to back high inflection investments. And one thing that I think for those of you, and if you're ever on Kleiner Perkins' website, it's actually like a cool little timeline that you can go through. I think Kleiner Perkins has always kind of been on the forefront of what the future is, right? And I think that's also defined some of the, investments that you guys have made. And I'm just curious, like you were talking about that you joined to bring in like also new energy and think about the next generation. Even with these 2 new funds that are here, how are you and your team thinking about what the future looks like right now at Kleiner Perkins, and what kind of went into the thinking around these 2 new funds?
Yeah, I think as you mentioned, this is our 20th venture fund. And so, having a long history of investing in early stage companies, this is precisely what this fund is meant for. It's to invest in lots of Series A's, some seed, some Series B's. And that's sort of the bread and butter where, we get actively involved with these companies as board members. They're in the areas of enterprise, consumer, fintech, digital health, and hard tech. So those are our 5 core areas. And we have partners representing all 5 of those areas. And then our select fund is a fund that it's our second select fund. And it's, I'd say like half of those funds are used to double down into our existing companies. So the companies that we think are just generational, iconic companies that we are already involved with on the boards of, and that we want to invest more into. And then the other half are more growth stage opportunities that we may have missed at the Series A or the Series B. But it's the same team, the early stage team that also invests out of our select funds.
Great. And so just out of curiosity, because you were talking about the fact that, because I want us to talk about Pakistan, and I'm seeing like a ton of questions come in the chat. So I promise that we'll get to as many of them as possible as well. But just out of curiosity, you talked about like, it takes a little bit of time to become, quote unquote, like a successful venture capitalist. And so much of it is picking winners, right? And you've obviously done that from, some of the investments that you made even before you were at Kleiner. I was just curious from a pattern recognition perspective, is there any through line that exists amongst some of the founders that you've taken early bets on that have been some of the best investments that you've made?
Yeah, I think you can't compromise on founder quality or founder intent. Quality is a very subjective word, but people who are really intent on the problem that they're solving. It may be something that seems seemingly minute in nature, but they have thought more about it than anyone else probably in the world, and are not just thinking about it, they're building against it or about to go build to solve that problem. So there's a lot to be said about, and that sort of also lines up with our own thinking. We typically invest in companies that we know something about, and so we approach it with a prepared mind, where we've thought about the same problems that they're thinking about, and whoa, like this person has like thought about all the ways things could go wrong, but also thought about like if you did it, all the things that could go right. And so, so I think a lot of it does come down to the founder and the jockey, really. I mean, I think there's companies that are created in spaces where there's dozens of competitors, and typically one wins, and the one that wins is the really, really big one, and a few that end up quote unquote winning end up being maybe 1/100th the size, or maybe 1/10 the size. And our goal is to be that one that wins. And I think we have a long history of that with some good fortune. I think there's some real skill involved from our perspective, but also there's some luck. But I think our job is to make it as bring as much skill as possible and not leave it to luck. And I think there's lots of things that 50 years of a firm can help you help the next founder with whether it's like as simple as helping hire your first salesperson, or helping make some really strategic fundraising decision. And so there's lots of little things along the way, lots of small points. And this, Kulsum, as like the advice that you give your founders every day. It's I'm not sure if you've seen this little Facebook thing that goes viral. It's like 1.01 to the 365th power is 37. It's like the notion of compounding every day. Like you do something right every day and you compound on that every day, the result of it, which is like exponential and really big. And so I think I view our jobs as venture capitalists kind of similarly. It's like providing really good advice every day, or multiple times a day, to our founders who have this like desire to go solve problems and build something really incredible, and for us to really be a guiding hand in that.
And being consistency, I guess, is kind of that underlying thing that you're talking about there. There's a really great question in the audience that's asking you, what was your best investment? Which is like, in my opinion, Sophie's choice. It's like picking your best child. But what do you feel like was your best investment, if we wanted to talk about that, and why? And I'm going to add on to that, because I also really love the anti-portfolio question. Like, what is maybe a company that you said no to that you're like, damn, I shouldn't have said no to them, or maybe in saying no to them, it taught you a lot, actually, in terms of what not to do in the future, or what to do in the future?
Well, I think the no one, I don't think I really said no to them, but I was really fishing in this pond, and I was even talking to them. It was Zoom, on Zoom. And just given that my area
is B2B SaaS, yeah.
It's a collaboration productivity products. And I've been spending quite a bit of time in circa, I think 2014, in next generation like video conferencing. And I think at the time it was not deemed to be a big enough problem in the world. Like there was WebEx and GoToMeeting and other things that were used, but not like, people were pained by them, but like they used them. And I think the general belief was like, you can't really provide too much more innovation around video conferencing. And there's a few companies that were coming out at the time to do next gen video conferencing, and Zoom being one of them. And I think it was just, we're early stage investors. And I think as a collective, we deemed like maybe it wasn't a big enough opportunity. And, famous last words, right?
Was that pre-pandemic?
Oh, we're talking about 2014.
14, yeah. Which, I mean, I think the pandemic is Zoom just completely took off. Yeah.
So we're talking about, Series A, Series type of opportunity for Zoom and companies like it. And so we had a prepared mind around the sector, and the prepared mind suggested like, not sure it's going to be big enough opportunity. And so that's also where the mind plays tricks with you, where you just don't, it's obvious, but it's like, but there are companies that exist already, and they're okay. They're good enough, and but not really good enough, because I think we all struggle with video conferencing, even going back 6-7 years. So that's an obvious one that I would say, especially because it's in my area of where I invest, and so I would say that I definitely judge my investment performance based on the ones that I miss, not the ones that I actually invest in. It feels great to be in companies like Box and Yammer and Slack and Figma, Intercom, and lots of other companies. And I would say don't, as a venture capitalist, I'm not sure if we dwell too much on the successes and don't celebrate even too much our successes. I think there's so much that's happening in that moment around that company that from the outside looking in is already deemed to be successful, but there's more to be done. Case in point would be a Google. Like Google is a $2 trillion company, but there's more to be done there. And it's hard to really, declare it a success because there's more to be done. And so I think just in general, I think we have a hard time celebrating our successes. We're going to celebrate our 50 years because I think the impact of the 50 years of us being around really is incredible. From from millions of jobs to 4+ trillion market value creation. It's that is worth celebrating, but I think every single individual company is harder to celebrate.
Okay. So is that your answer to the best investment, or maybe your favorite investment? Okay. Awesome. Yeah. Agreed with that also. And it's crazy. I'm on fund 1 and I can't even imagine fund 20. It's like crazy to imagine like a company, like a fund being around for 50 years. So there's a lot of Pakistani founders in the audience, a lot of people that are part of that startup space. And obviously, as you know, because you were part of this, one of the biggest pieces of news last year in Pakistan was that Taajir raised funding from Kleiner Perkins. You were the one that led that investment. And that was a big deal. And obviously it's a big deal even for Kleiner Perkins, which, rarely looks outside of Silicon Valley, let alone like emerging markets, let alone Pakistan, right? So would love to hear kind of maybe the behind the scenes story of that, of how that happened. And are you guys, especially given your background being Pakistani and having that connection, is that something that you guys are continuing to look at today?
Yeah, I think actually it's a kind of a funny story because about in March of 2020, right at the beginning of the pandemic, my wife is a physician, but she's also in the world of startups. And
yeah, she's at Thrive, right?
She's at Thrive. She started a health tech company before that, and so she goes to YC Demo Day for fun and invests in companies on her own. And she's like, hey, I met these guys over video. Like they seem awesome. They're like Pakistani guys who are doing this thing, doing like wholesale distribution in Pakistan. I'm like, that's cool. I wouldn't invest in like Pakistan right now. Like seems kind of like, and I sort of dismissed it to be quite honest. And so a year later, someone in London introduced me, like, and actually I think he's a Swedish investor. He introduced me to this, he's like, hey, did you meet these Pakistani guys? I put some money in the seed round and out of YC and seemed to be doing really great. And I was like, oh, these guys are awesome. And so I meet them, and the Taajir, just for folks who don't know, this is an Android app that allows mom and pop shops like corner stores, and anyone who's Pakistani knows that we all go shop at those corner stores, provides them with inventory on a daily basis, or they place the order via the app. and they get next day delivery of, whether it's biscuits or water or flour or rice or whatever else that needs to be sold in that store. And so Taajir has distribution centers across Lahore, Islamabad, Faisalabad, and they supply these mom and pop stores, transparency around pricing and inventory and all the things that allow these businesses to do what they do for the local communities. So tremendous impact to local communities, obviously, because they serve them. So, so the problem itself was like, oh, this is like an obvious, interesting problem. And the founders, Babar and Ismail Khan, just seemed like they had thought about the problem and they had actually failed at their prior business and, learned from.
Yeah, this was their second startup, right?
Yeah, and just the way they thought about it, there was just a lot of earnest thinking and intellectual honesty and execution also. Like they had real GMV every month, and so it was partly like the market seemed so obvious, and it seemed like a great for a tech-enabled business that needed to exist. This seemed like a great one because it actually served like the one of the most daily parts of our lives, which is like groceries and that value chain, and so that the problem made sense, and the founders are incredible, and so just as you know, Kulsum, like that's how we tend to invest, is like people in explosive markets. So and that was our first investment in Pakistan, and our first first ever, and yeah, since then actually we've done a couple more, and I think one that's unannounced, and the other is a company actually that's broadly serves the Middle East, Turkey, Pakistan, is a crypto exchange for the region.
Oh, awesome. Cool.
Called Rain. Right. So.
Oh yeah, Rain, of course, that was announced.
Yeah, and so yeah, more to come. And I would say I'm the only person who's spending time on our team looking at Pakistan and even that, maybe I'd say that's like less than 10% of my time. So we're not set up to broadly invest in Pakistan, but I would say that whenever there's an extraordinary founder entrepreneur with like building something incredible, we just can't not look at it. And we have a history of we invested in a company called Zendit, for example, which is a Stripe of Indonesia at the Series A. We were early investors in this company called Trendyol, which is the Amazon of Turkey. So I would say that we will do investments abroad in special founders going after special opportunities.
That's great. And as the entry point for people in the audience that are thinking to ask you this question, is the entry point more that you feel comfortable more at a Series A, where that you can see a little bit more traction than maybe where Kleiner normally enters earlier, right? So just curious, like for you guys.
Yeah, our sweet spot is actually the Series A. Most of our investments do happen at the Series A, and our I'd say like if it's something that's further away from us, or like we're not as in tune with the problem or the market, it ends up being probably even later than that, so Series B. And I would say seeds are typically, we're betting on founders where like, we worked with them before, or we just fundamentally believe that the market is really interesting and we should back a great team there. But most of our investments do happen at the Series A, and Taajir was quote unquote a Series A, where the founders had built something on the seed round and there was like real existence proof of what they were building.
Yeah. Awesome. And so out of curiosity, because I would love to talk a little bit about your perspective on the Pakistan startup space. Obviously you guys are invested in Taajir, and you were mentioning like you're looking at other things. You're in one that hasn't been announced yet. As you probably know, because you guys were part of this statistic, in 2021, startups raised around $350 million in funding, which is actually 5.5x of what we raised in 2020, which is insane. And I think that's something that happened globally, right? We just saw a lot of flood of capital that just went to emerging markets. And for Pakistan, it was the first time where we saw checks from players like you guys, Tiger Global, a bunch of different funds that came in. And so just out of curiosity for you, because on your bio on the Kleiner Perkins website, you call yourself, or your portfolio, I guess, calls you're the blind spot monitor, right? Which I really love that term. I've never heard it before. So I'm just curious if we could apply that here. Looking outside into the Pakistan startup space, if you were to put on your blind spot monitor hat, what are the blind spots? What are the things that we should be looking out for as the space is evolving and growing?
Yeah, first, I think this. One of the reasons why folks have gone to Pakistan is because it's a very interesting country. It is 220 million people, a burgeoning middle class that is internet connected, mobile connected, and many of us speak English. We have a good educational system, could be better, but and then we have a good judicial system. We have laws of the land. We have we all know like some ups and downs with our politics, but I would say just generally speaking, if things feel a lot more stable from a political standpoint. So these are all reasons why people or people look for that, especially outside investors when they're considering making investments in a country. And so I think there's just a lot of positive reasons for folks to enter Pakistan, so this huge multiple from the year prior, and I think it's going to continue because it is like an obvious country to build for locally. So products that get locally sold are tech enabled, and then the next step will be building products for global consumption, or tech products that are made in Pakistan for global consumption. And I think there's still lots of work to be done. I would say so much of it comes down to talent. The people who are building these products, technologists, engineers, and then it comes to management. So like executives who've seen scale before, who've built at scale before, who've been at companies where there are missions, there are values, there's like things that are the glue that help companies as they scale. Like when you're a 10-person startup, it's you sit in a small office, and you have a culture and you feel good about each other. But then when you go from 10 to 100 to 1,000, how do you maintain a culture, maintain a set of values? And these are all things that we haven't experienced yet. As a startup ecosystem, as scale, and it'll require that someone come along who builds a real company and a diaspora from that company that goes off and starts other companies. And so the founders of our firm, Kleiner Perkins, started at a Fairchild Semiconductor, and and 8 people left that, called the Traitorous 8, to go start Intel and other companies. And so, but that place had a real culture and values and glue that allowed others to say, I'm going to leave that company and go start my own. And here Kleiner, Eugene Kleiner came and started Kleiner Perkins. Some others went and started Intel and other semiconductor companies. And so that is, if you study that example of Fairchild Semiconductor, that is kind of, the thing we need in our ecosystem. And that was, we're talking about 50 years ago. So I wouldn't say we're 50 years behind, and we can, we're going to, time is moving faster these days, so it's not going to take us 50 years to get there. But it will take us some time to get to that moment of where there will be a really successful outcome, and people from that company will leave and go start other companies, and executives will get created, and they will help. So you asked a question about blind spot monitor, and I think I'll be candid. My biggest fear is like there's because of all this money gets raised, it's a lot of dollars, and the biggest fear I have is like there's a fraudulent event where there's a business that just doesn't live up to all the things it said it would do, and there's actual like real fraud involved, and that will put the whole ecosystem, set it back by a lot, because it will then destroy the trust that people are putting in the founders that we're backing. Right? Is so much of what we do is comes down to trust. I'll share a story where my father, he's like, hey, so do you have someone in Pakistan who works for Kleiner Perkins who's monitoring your investments, like your books? Because my dad's a banker. So I was like, no, Dad, we operate on trust. We operate, and so, I think if someone breaks that trust, especially someone raises a lot of capital, that will be detrimental to the ecosystem. And so I really worry about that. And hopefully that just doesn't happen, and everyone does the right thing, which is build great technology companies that serve lots of people.
Yeah. And I think you pointed it out completely right? I think we've always had in Pakistan, even, prior to this and more traditional business sectors, there's been cultures of double and triple books, right? For reasons like there's, we do that. And it's also a function of our really backward tax regime that has still not really moved forward and been more progressive. And so there's a lot of reasons for that. But also when I think about the amount of international funds, even in a lot of the deals that I've been in, so much of it that's important is doing it hand in hand with local investors. And I'm curious for you, obviously Fatima Gobi has been in Taajir as well. I'm curious for you guys, as you look at deals, how important is having local funds that you can work with on the ground or helping, especially because, I mean, obviously, you can go back and forth to Pakistan, but typically diligence, especially in the last year during COVID, was done remotely. So I'm just curious, like for you guys, what are you doing to kind of build the rigor that you normally do if something's sitting in your backyard, but how do you build that trust more?
Yeah, I think there are a number of consumer products that are we've looked at based in Pakistan. So you can do some, in your cousin's WhatsApp group, say, hey, can you go check the product? And what do you think of, like, what do you use these days? And so that's the benefit of being Pakistani and having lots of cousins in Pakistan. But that doesn't totally scale for diligence. So it's one of the founders that we just backed. I have a very close relationship with someone, they've known for almost 20 years. So there's a lot of it still goes to like people that are very much in common between folks that you trust. And then this person also worked for people, actually worked for one of our portfolio companies for many years. And so you can reference the people. And so a lot of it comes down to, the people that we've worked with before in, one degree of separation typically. And that's been, the other person that we backed doing this crypto exchange is someone I met 10 years ago when they were an intern at one of our portfolio companies. And so, you've seen that person for 10 years do something and do the next thing. And so there's a continuity of like their intent and what they're aspiring to go do. So, and that's why it's going to, just take some time for folks like us, investors like us, to just get comfortable with the people, because we're investing in people and trusting those people.
For sure. And I guess that kind of lends itself to a discussion that happens a lot in our ecosystem, which is this question around privilege and network, right? Which is some of the founders, and we're actually coming out with their 2021 ecosystem study. So we actually delved into the data around this as well. But so many of the founders that have raised capital, they speak English really well. They happen to go abroad for school. They had the networks or the pathway to get to someone like you, right? And for so many other founders that may not have that privilege or that background, or may not have 10 years of experience to have happened to have worked for a portfolio company, what is the pathway? How do they get to people like you? Because there isn't a culture of trust. They may not know someone who knows you. What would you recommend to them? And I'm sure a lot of those people are sitting in this audience today.
Yeah, it's a great question. I think it is totally comes down to privilege, that some of the founders who are able to raise are US educated, work for US companies here, somewhere else, and they are probably the ones that are raising most of that capital. And a friend of mine recently said, hey, can you meet this founder? And I just said, hey, like, it doesn't seem like it's something we would invest in. He's like, can you just do me a favor and spend time with this founder? Because you know what? They're educated in Pakistan. They're amazing. They may not speak English the way, the US educated, but you should meet them. They're amazing. And so of course they're amazing. I'm gonna spend time with them, and like from what they're building, what they've accomplished, and just like on not a lot of funding. So it's just like, the issues that we deal with in America. Someone who has an accent, who's an immigrant, like, turns out like we back them more. 50% of our investments are in immigrant founders at Kleiner Perkins. So, and that's just, immigrants do build a lot of companies, and immigrants, come with accents. Yeah, they get the job done too. And I'm an immigrant, but I went to an American school, so I lost my accent. So I don't get to still claim, but yeah, like, I think that's a real issue, and I think it will take some time, to be candid. Like, I think I wish it was just like so meritocratic, where it didn't matter that you didn't go to school in the US, or because we just did it. Like, there's points of connection between these people, and that's why we are investing in them, because and it comes down to trust, not that they went to school here. It just boils down to trust. And I would say a lot of the founders that I've talked to even recently, like, they worked here, they did got schooled. In fact, they have co-founders who are not from Pakistan. So, but I think that will change. That will evolve. Like, let's say those founders will still get funding, but I think Pakistan educated founders who understand the market and will get backing. It will take them a bit more. Like, if I was to provide words of encouragement, it will just require a bit more putting your head down and working for it, and inevitably, like your results, your work will speak for itself, and you'll get the funding that you need because you've done. But it doesn't take away from the fact that funding also helps you, do some of that work.
For sure.
But
And
perseverance, I would say
perseverance is good. Also, I mean, just as a quick aside, recently we're investors in Truck It In, which is kind of the Uber for trucking, black book model in Pakistan, one of a few players that are like that. And really great example of Sarmad, who's one of the founders, came from, like, he knew years ago that this is what he wanted to build, but he also knew that he needed experience. And so Junaid Iqbal, who's an investor in them, was the ex-GM of Pakistan and Saudi for Kareem, tells the story of like Sarmad waiting at a talk that he gave, and you could just see him at the back of his, like, waiting just to talk to Junaid, and was like, listen, I want to build this down the road, but I want to come work for Kareem first and build and learn how to do all of this and then go on to do this. And I just love that, because I think Sarmad and all of the founders, but like he just built like execution, like, and all of that and learning, and then had the Kareem network when he left, right? Which is such a great example of someone that may not come from, like, foreign educated and all of that, but still was able to leverage and work somewhere. And I think in Pakistan, we have a lot of really amazing young people that are all working at these startups right now that are kind of building that story for themselves.
Just having the conversation with our Taajir founders this week, and they were just saying how, a lot of startups want to hire the people from abroad, and they're like, what they found is that actually, that's it also comes with some entitlement and that, I'm US educated, I should be treated like a king or a queen, and so I think there is definitely more humility. At least that's what they found from their employees, where the folks who don't have that, they actually just come bring like their full self and hard work and ethic. And so, yeah, I think you make an amazing point, which is like, go work for these companies and build your resume, as anyone like me over here had to do, right? Just build a resume working for a company like Xilinx out of college. And those companies now exist in Pakistan, which is amazing.
Yeah, awesome. We have so many questions in here, so I'm going to try, guys, to get to as many as possible. I think we've kind of talked about some of this stuff. There's a great question in here that was being asked by someone that says, Mamoon, during your early stage of career, you decided to pursue an investor path from options of inventor, founder, and investor based on your experience. So the first question is, in this day, considering the current trends, if you were to do this again, if you were in your late 20s, what pathway would you have taken? Would you have done the same thing, or would you have done it differently given the world that we're living in today?
Yeah, it's a great question. So, so first 6 years of my career was inside of a company, building products, et cetera. And so the juncture was, okay, do I continue to go down at that point, starting a company, or working at another company, or investing? And I took the path of investing. I would say if I was faced with the same decision today, maybe I would have thought a little harder about starting something, because I think it is, I wouldn't say it's easier to be a founder, but it's just like there's a lot more capital if you want to be a founder. And and when I came out of business school, capital was scarce. Like the average, just to give you an example, one of my closest friends in his business school was Jeremy Stoppelman, who started Yelp at that time. So he dropped out of Harvard Business School to start Yelp, and his seed round, and we were in San Francisco at the same time, this summer of 2004, was done at 1.5 pre. So raised $1 million for 40% dilution, and you don't see those deals in Pakistan anymore, right? So that gives you a sense of what there was not a lot of capital available for someone very talented. And he was the VP of engineering at PayPal before that. So it wasn't like, he was just some new founder. He was someone with a real background. And so at the time, he was like, that's a lot, one is capital is hard to find, which is why you're getting diluted so much in just even the seed round. I think the world is fairly different. And I think it's also the TAM, so the market for building technology companies is way bigger. And so if I was to put myself in those shoes, 17 years later, maybe I would have thought more about starting something.
Interesting. You were kind of alluding to the Yelp founders, the fact that he was going to do 40% dilution, what that price looked like. I mean, this is when we're talking about blind spots, like the prices in Pakistan, everywhere around the world, right? Like valuations just shot through the roof in the past year. And I'm just curious for you, because Pakistan also hasn't really had real exit or liquidation events yet in our startup space. So just out of curiosity, like what are your thoughts on that in terms of, the prices and valuations going up right now? As advice also to founders, like what should they be doing? Should they be pushing for that? Because obviously, we don't want to see down rounds in the future, but just how do we kind of keep their feet on the ground, I guess, as advice?
Yeah, I think, when you're a software business and you're building software, it's like, you can, your high margin, you can, most of your ingredients are people and software. And so you don't necessarily have to have a high burn to build software. But when you're building physical goods and you have logistics involved, you have warehouses involved, like your capital expenditures are there, you've got real burn. Those are the companies that can get more exposed because you have to spend to acquire customers, to hire drivers, let's say, and have warehouses and et cetera. And those are companies that can, if they're raising a high valuations, they're raising a lot, and they need a lot more to sustain themselves. They can be in a precarious spot if the markets turn, which they are turning right now. But as anyone who's followed the public markets, things are really softening in the public markets, which has a trickle down effects about 6 months later in the private markets, even sooner for later stage growth. So to your point about like, do you raise at these high valuations because you can? I think to an extent you raise, you try to. The first round, I always tell founders, like, hey, like, even if you're my friend, I'd say, optimize for the right partner in that first round, first institutional round, like the first board member. Like, yes, you may end up giving up a bit more dilution, but optimize for the right people to help at that first juncture. And it becomes less important who that is over time. But the first one, you're going to just like swallow it and just, take the lower valuation for the right people. And that sounds very self-serving, but I do believe that if you pick the right early stage investors and people who've been there, done that, who can help you, you should do it. But as companies go into later stage rounds, and capital is a commodity and it's abundant, and it's still abundant. I would say, it's not that everything's getting shut down now. It's like capital is still abundant to an extent. I have a company recently, late stage company raising around, and the delta between one valuation to the next is like, one is 3x the lowest, and we're talking about billions, like, and it's like, and the highest is like actually may not make sense for them at all. It's just like too high, and you have to do a lot of work to ever cross valuation over the next, let's say, 24 months. And so, and that's also not good for employee stock option grants, which are really, like, your grants are going to be higher. Like, people are going to feel demoralized if it takes a long time to cross that hurdle. So with balance, raise valuation that not the highest valuation, but like what makes sense. If even as a founder, people are like, this makes no sense to me. It probably doesn't make sense, and you should probably.
It probably doesn't. There's a great scene in the TV show Silicon Valley where the founder is like sitting at the bar, realizing he's like, I had got this great valuation. He's like, oh no, my company has to actually meet that valuation now. So I love that scene. I feel like that fits so well with what you were saying as well. And I'm just curious for you, because you were talking about like, getting the right investors on your cap table early on, and maybe taking a bit of a hit on the valuation in order to do that. What are the things that you would advise founders to expect from their early stage investors, the people that they're bringing into their company? What are the things that they should ask for, and should they expect from their investors, not the other way around?
Yeah, it's a great question. Depends on the kind of business, but let's say it's an simple example, enterprise software business. You build, you build enough to get to an MVP, maybe a beta version of a product. You want to get in front of like half a dozen customers. Typically an investor has trust with other companies where they're involved. But like, hey, you should try this product from our other startup that's looking to, and it's a friendly conversation. It's a friendly, right? So, and customer introductions is usually a very simple thing that happens very frequently with investments that we make early stage. Then it's like, okay, well, now we're selling, we need to go sell the product. We need to hire our first, salesperson or sales leader. And the initial hiring, we help a lot with. And that's, more limited to enterprise businesses or B2B businesses. I would say in a consumer business, it's slightly different. Your customer is the consumer, and there you're typically, building a product that a consumer will buy or adopt. And usually that's done more digitally than through people. But I would say a lot of the early stage work, this is people, more people. Great companies are built by people and by great management teams. And I think that is the biggest nut that we help crack, because when you have an investor who's been part of certain types of companies, other people who are executives or who are looking for the next thing, trust us that this is actually, one you have validated with your money. The other is that, you're telling us all the reasons why you should do it and all the concerns and risks you may have. So we can provide a balanced view on the opportunity for other people who may be interested in joining a company. So I think a lot of that, what we do is that recruiting piece in those early days.
Awesome. Great. And so we have a few last questions, and I want to try to get to as many as possible before we run out of time. So someone's asking actually that might want to get into venture capital themselves. For a finance grad and prospective entrepreneur, how important is getting experience at a VC firm before you take off? Really? Yeah.
Take off for where?
I don't know. That was the question. Maybe just say let me reword the question in a way that might be helpful for other people looking to get into VC. What would you recommend for people that might be finance grads? Maybe they want to be a founder down the road. How important do you feel working at a VC fund is?
Not so much. I think
VC
funds are, they're not that many. Still, there's a lot more than there used to be, but the jobs are not posted anywhere. It's not like you go on a job board and find a VC job. I would say if you want to go start a company, go work at a company. Go work at a startup, go work at a high growth company, and learn. There's so much learning that you'll be able to short circuit by going to one of those companies, that by the time you're going to starting your own company, 2 years, I think, is an adequate amount of time. 4 years, even better. I'm a big believer in, going somewhere and going deep on something. And I think it takes at least 2 years to go deep on a type of product and company that's serving a market. So go work at a startup.
And that's a great piece of advice. In terms of, for people who are founders in the audience, do you have any words of wisdom that you want to impart on them? No pressure.
Really go solve problems that you care about. It does come through when you're talking to investors, that you are the one, you want to be viewed as the one who's going to solve the problem. And that only comes with true intentionality and real earnest desire to go address something that you're pursuing. Don't be a wantrepreneur, in other words.
I love that word. That's great. In terms of what is the most appropriate, so for people in the audience, a lot of questions that came up is the most appropriate way to pitch to you, if at all. Obviously, you're super busy and probably get pummeled by people pitching you all the time. So what is the most appropriate way to approach you?
Yeah, I think email is a quick hey, here's what I'm doing, and here's a quick deck. It's easy to browse through it. It takes 3 minutes to browse and probably 2 minutes to respond. And I hope I don't get 200 decks now, because that means next week is shot.
I mean, well, you did reveal that you're going to Pakistan. We definitely got people in the audience being like, how can we host you? And I was like, he's there for 7 days, guys. Give him a break.
Yeah. And I've already gotten it from my parents, who happen to be there at the same time. We're you cannot be here for 7 days.
Oh, yeah.
And it's I have 4 kids that I will miss a lot. And so back. So no. But yeah, where was I?
You were talking about the advice that you give someone to start approaching you.
Pitching. So you can email me, Mamoon@KleinerPerkins.com.
Great. That's very dangerous that you just did that, but cool. Be prepared for lots of people approaching you, which is really generous of you to give your email, and thanks for that. So one thing that I'm curious about, because obviously there's so many things that are kind of coming up in the world right now, right? In terms of Web3, like the metaverse, all this stuff that's happening. I'm curious about what you're the most excited about right now. And then also on top of that, I think for people who are in VCs, and especially given, what Kleiner Perkins also represents, I think you have to be really intellectually curious to kind of stay on top of what the trends are going on. So on the note of like, what are you the most curious about? What are the things that you're the most excited about what's happening around us right now?
Yeah, I think we can't help and not ignore crypto, Web3. We've, as I mentioned, made this investment in Rain, which is a crypto exchange based in the Middle East, but serving broadly the region. And we view that as an on-ramp into the world of crypto. You can't do anything in the world of crypto without owning crypto assets, and that's what Rain allows you to do. And so that's step one. We've also made some investments in NFTs, so collectibles. We recently announced an investment in a company called Autograph, which is, think of it as like a next generation talent agency. So athletes like Tom Brady and Tiger Woods and artists like The Weeknd have their NFTs drops on this company Autograph. And so those are just two examples of like, we are like going right in, and we've been buying crypto assets for 5 plus 6, 7 years now. So we like on our own buying Bitcoin and other. So you have to be, as technology investors, you have to be sort of leaning in and understanding. And sometimes you get it wrong, or sometimes it's just too early. And here it feels like the time is early, but it's still right. And at the same time, when the valuations feel like they're, everything's working and everything's going to just be foregone conclusion, everything's going to be huge. And that's typically what happens when there's a bit of a hype cycle going around a category, which may be happening right now in crypto. And then you go through another trough of disillusionment when all the tourists go away and all the real building happens. And that's not bad either for a space. And then you have the next wave, which is where the real value creation happens, or the real like end user value creation happens, where the actual consumer or the business benefits from the technology being built. So, but if you knew the answer to where you are in that hype cycle, you wouldn't tell anyone.
Is there anything that you do personally to say, like in terms of keeping kind of that curiosity alive? Like personally, what are the things that you do to kind of make sure that you're on top of things? Not even about work, but generally.
Yeah, just generally just read a lot. And I think I don't necessarily read like sci-fi novels to think about the future. I just think, it's like current events, but like, it's not even like reading research papers from like some great professor. I think research is research for a reason. It's like, it's academic, and maybe it becomes something real in 10 years. But I would say it's not, there's something about like just intellectual curiosity around technology and what the practical uses of technology are. That's where like at least my mind goes to, is like the practical uses of technology. And that goes back to my early engineering days. Like the reason why I at some point I thought about doing a PhD was, well, PhD meant like academic and not really taking that research and taking it to the real world. It was really defending a PhD thesis around something so academic. And so and my mind veers towards the practical side of things, which is why I love venture capital. Is like, the stuff you do today is going to be in market 2 to 3 years, if not sooner. So the stuff that I read really points toward that things are just coming down maybe a few years out. And as a technologist, you have a sense of like what the capabilities are of whether it's hardware, software, semiconductors. And I kind of would say, broadly speaking, people talk about the different layers, layer 1, layer 2, that's applied to crypto. But I think about that in terms of like layer 1 being, the physical layer. Anyone studied engineering, there's the OSI stack. And so I think about more like chips all the way down to software that people use, and those are the 7 layers. And I try to read about all the different layers that are evolving and changing in any given year or moment in time.
Awesome. That's such a great way to leave us. So thank you, Mamoon, for joining us today and giving me the privilege of being able to moderate this conversation. And thanks to Ali Fahad and the Bach Launch team for hosting these conversations, and the platform that they have, I think, is incredible for Pakistanis all over the world. So thanks, Mamoon. And thank you, everyone in the audience that really gave some really great fodder to the conversation as well.
Thanks so much, everyone. Bye.
Bye.